Hey gang, Matt from Easy Breakouts, about to start another current market trend review, but before I do, just wanted to mention that if you find this video helpful, be sure to click on that subscribe button down below. Also, you can view additional videos by visiting our YouTube channel. Alright, let's hop into our analysis. So folks, across the board, quite a walloping as there was reaction to some of the new policies coming out of the Trump administration. Folks, at one point in the time, we had the Dow Jones off almost 200 points on the day. S&P's closed down. Although we did close off the lows, we did close down significantly. We had the Dow and the S&P's down about 0.6% on the day. NASDAQ was down about 0.83 on the day, and the Russell here down 1.3% on the day. So across the board, we've seen the biggest selling that we saw all of 2017 so far. As we take a look at some of our commodities, crude kind of just stuck still in that range between 51s and 54s. And then the bonds and the gold, even though they were slightly bid today, we did not see the lift that we normally see in these two risk-off assets. So if we kind of think about equities as the risk-on, we didn't see a subsequent bid coming into either the gold or the bonds throughout the day as we saw the market selling off. So we'll see all of this on the charts, but as always, starting off our analysis with the S&P 500 daily charts here. Folks, this is what we were just talking about. This is the area to watch out for. Right now, the market is, I'd say, kind of like in a 50-50. We tried to just test those 2280s down below. We pierced it. We spent about 2 or 3 hours down below there today. We managed to close above those 2280s just by a few pennies, okay? But there's still some things that are going on structurally that I'm not the biggest fan of. The first thing is whenever you have like these gap ups like this right here and like there, so you gap up, you trade for a few days, and then you gap back down. That's what some technicians might refer to as like an island top reversal. Basically, you've abandoned all of the trade up there with two gaps on either side. Somewhat of a negative sign. Also, just the fact that we went down and undercut those 2280s, folks. For right now, I kind of the jury's out for me at this point. We went from being very bullish and very optimistic to now, I think, a little bit back into more of a neutral stance. At this point, you know, we didn't really bounce per se and get up back up into like the 2290s. We didn't quite do that. And so to me, I'm going to be looking for the Tuesday trade to see if we can maintain above these 2280s, or if maybe throughout Tuesday and Wednesday if we start to trade back down, because that would be my key indicator right there. If we're not able to maintain these 2280s and we start rolling over, it could potentially mean the market needs to be correcting sideways a little bit longer. Maybe there's a bit of a pullback in order. But folks, these 2280s was that critical spot I'd be looking for. And now that we've breached that to the downside, folks, the next place that I'm going to be looking for is being able to maintain these 2260s. As you can see, that was a place of prior support quite a few times here. So not only did we fail the prior breakout, but now we have to take a look at where the buyers did step in the past few weeks, which has been right around the 2260s. And so, folks, that's going to be the place to watch. If we're not able to bounce, okay, if we're not able to on Tuesday and Wednesday's trade bounce up, back up, and reclaim this area above the 2280s, what I'm going to be watching for is if we fade, how do we behave right near these 2260s? Those are going to be the levels to watch as we move forward. Right now, we picked up another distribution day, which means we've got 5 heavy volume selling days, just indicative of a little bit of institutional selling. All rallies have distribution days or institutional selling. So right now, we're still within the realms of a healthy uptrend, but it's just something to watch, just something we're seeing on our end. Now, taking a look at the S&Ps, or I should say the NASDAQs rather, taking a look at the NASDAQs, we see that the NASDAQs did also gap down with the rest of the market. As we take a look at the intradays, a little bit less of a gap, less apparent of a gap, and we can see that we actually just pulled right back in to those prior breakout areas. We bounced right on them. So again, the NASDAQ is exhibiting a little bit more of that relative strength, whereas the S&Ps barely closed right at those prior breakout levels. You can see that the NASDAQ pulled right down to them and bounced. So for right now, we're seeing still a little bit of relative strength for the NASDAQ. Also, keep in mind, Apple is going to be reporting in a couple of days. We're going to have Facebook and also Amazon on deck in the next few days as well. So I think the markets are still watching to see how the earnings reports come out from these companies. All right, taking a look at the commodity space here, taking a look at the crude as we've been mentioning. The crude, bit of a range that it's been stuck in, right between the 51s and 54s. No big directional tell here from the charts. The bonds here, as we were mentioning, so with all of the selling that we saw today, we did not see any lift in the bonds at all, right? Pretty much flat here on the day, whereas if you compare that with the S&P, with that big selling that we saw first thing in the morning, we didn't really see anything to that degree here in the bonds throughout the day. And even the gold, if we take a look at the gold contract, a slight bid coming up into the 1200s. So retesting those 1200s here that we broke down from last week, but then fading back down below the 1200. So no big release to the upside as we saw the equities start to come under a bit of pressure this morning. So folks, no tells on the commodities here. And as we've been mentioning on the gold, still a bit of a balance. If we kind of just zoom out of this, here's that balance that we've been looking at right around from the 1195s to the 1200s. You can see here we've made that first attempt up into the 1200s, or the 1195s rather, before kind of backing off below it. So folks, right here we can see that there's a battle between the buyers and the sellers on the gold, and we need to have a break one way or the other to get some sort of direction. One final thing I wanted to mention on a day like today, right, where you have everything just selling off, and in fact, when we were looking at the breadth, it was like almost negative 1800, negative 1900 decliners to advancers at one point in the day. One of the things I was mentioning to our room is we look for relative strengths even on down days. So we don't go actively shorting. We don't go and try and trade long stocks to the upside, trying to catch a bounce or anything like that. All we do is we look for relative strength. So what we mean by relative strength is, if you take a look at what the NASDAQ did, right, just straight up selling right off the opening tick, just selling for the first, 60 minutes at least of the day. What you want to look for are stocks that are resisting that trend. Maybe stocks that initially sell off but quickly recover back to break-even levels. So one of the swing stocks that we've had on our trades is this TDOC, and this is very interesting, right? Like, to me, when the markets are selling off 1.5%, almost 2% on the day, why is this stock just going sideways? That to me is very interesting. What is causing the investors in this stock to not sell this with the rest of the market? They must think that there's something good about the stock, and that's causing them to hold on to the shares, which is not letting this thing fall, which is by definition relative strength. When everything else is falling and your stock is going sideways, those are the ones we want to pay attention to. Or even like some of the chip stocks today, we were looking at, one of our traders had brought this MCHP to the room, and while this did sell off initially, you can see how it bounced back above break even and kind of formed this little buy point right above the 68.90s. And while you don't necessarily have to actively trade this, look for that relative strength, right? Because look at this, when the markets are selling off and they do not bounce back to the break even point, look for the stocks that are going back to break even, because there's a reason why the funds or investors are continuing to accumulate those stocks and bidding up the prices even in the midst of a market correction or a little bit of a market pullback. So we can find relative strength not only on daily charts but even on the intraday charts, and if there's any silver lining to a market pullback like today, it really reveals to us where that leadership is. So folks, game plan has not changed. We're looking for the best relative strength stocks, breaking out of recognizable chart patterns and on volume. And folks, other than that, have a great trading day ahead, and join us for our next market trend review. Hey, by the way, if you haven't done so already and you're liking the analysis, go ahead and hit that subscribe button down below. And as a reminder, you can also view additional videos by visiting our YouTube channel. Or if you'd like to find out more about Easy Breakouts, go ahead and click that show more right above the comments section to find out more about Easy Breakouts. But other than that, have a great trading day ahead, and may the trend be with you. Take care, everyone.